All right, let's get set up for the US market. Steve Charest is with us, Chief Market Strategist at Divine Capital Markets. Steve, you heard Julia just outline the data docket and the Fed speakers as well. Amongst the highlights, new home sales and consumer confidence. Are they going to move the needle on the markets?
You know, we'll see if those specific items move the needle. The housing data has been something that we've been getting a little bit more comfortable with positive data, and I think that could help. You know, if the Fed decides to throw a curveball in there and go against what the script has been for the past several years, I think that might be a little bit of trouble, and we could follow the European markets lower. But you know, I think if we get good earnings in there, that should be a net positive.
How closely are investors watching what is happening outside the US? Because we are seeing a pickup in the China data. Should that give you a bit more conviction about names like Caterpillar that do have a sizable international footprint?
Well, I think it's sector dependent. You mentioned a name like Caterpillar. Surely the folks that are watching the heavy industrials, the capital equipment side, which has been a little bit soft, they're going to watch that very closely because that, again, that has been soft. You've also seen that in the tech sector, absent semiconductors, software has been quite a drag on that sector. So if we can see some more growth in Pacific Rim and also continued pickup in Europe, I think those two sectors in particular could be quite strong.
Steve, don't get me wrong, I like a good rally just as much as the next man, but how strong is the risk of a correction, especially given what is happening in Iraq and the knock-on effect on the price of oil? Are the markets doing a fairly commendable job of climbing this wall of worry?
Yeah, the melt-up continues. You know, it's primarily driven here, in our view, by this excess credit availability from the central bank. So until that starts to ease back, and it looks like, you know, the tapering is in place, but it's not yet noticeable, that can continue. Risk of a correction is always there. I don't think that an issue like ISIS running wild in northern Iraq that would be the tipping point, although we do think that there's still risk to oil of about $15 to $30 on that, depending on how far they get.
Steve?
But equity markets on their own, I think that they should continue.
All right, noted, sir. Thank you very much indeed for that. Stephen Charest, Chief Market Strategist at Divine Capital Markets. Julia.